Hey guys, welcome back to the channel. Today I'm going to be providing a logarithmic regression curve analysis for Bitcoin on the long term. I'll talk about what this curve is, how it's calculated, why it can be useful, and then finally my takeaways on what this means for Bitcoin. So if you guys enjoy the content, please do consider leaving a like and subscribing. By the way, this channel is sponsored by the cryptocurrency exchange FTX.us. This is a great exchange for buying, selling, and trading cryptocurrencies like Bitcoin, and if you sign up with the link in the description below or with my referral code SNOWYCRYPTO, you can get a 5% discount on exchange fees. So let's first talk about what this indicator is. Basically, it's just an equation. It is an equation that models the parent function y equals a times the log of x plus b. So this is the equation right here. X is going to be the time, that is the date, the x-axis, and then a and b are just going to be constants. And these constants are used to fit this curve onto Bitcoin's previous bear market data points. Okay, so what we're trying to do here is we're fitting the curve to all of these individual prices on these individual dates, and then we're trying to predict a curve that goes through these, a best fit line, and extends out these bear market phases. And the goal here is really just to figure out with an equation where the next bear market data points will be. Now, the rationale behind using a mathematical equation is because Bitcoin's price action does quite resemble a logarithmic curve. And the properties of a logarithmic curve are typically it has a very quick slope at the beginning, and it starts to slow off and then it rounds off. And this is what we see with Bitcoin, where again, earlier on in those 2011, 2012 days, we had high volatility. Bitcoin was capable of doing some pretty extreme returns, both to the upside and to the downside. But again, each year, every cycle, it seems to be that the volatility has been diminishing. Any way you slice it, from the bottom to the peaks, or from the peaks to the peaks, or from the bottoms to bottoms, volatility has been decreasing. And I'll touch on this point in a little bit in a minute. But the point here is that Bitcoin does have some properties in its price action that do resemble a logarithmic regression curve. And we're just using this curve to extend out prior bear market datas. And I personally don't consider it to be a bottom indicator. It's more or less just a zone. It shows you a zone of accumulation that historically has been a great opportunity to accumulate, and it's extending that zone out based on Bitcoin's price action, its volatility, and its historical moves. So again, this is just trying to show us a general zone of accumulation, not one specific price point. You can see the range is quite high on this. It actually ranges from around $16 all the way up to $34,000. So it's not going to tell you the exact bottom, and that's not what it's trying to do. Again, it really just tries to identify a general zone of accumulation where historically anywhere within this band has been a great time and opportunity to accumulate Bitcoin. Which brings me to the next point, that we are well within this curve. We're hovering just below the midline, and historically the midline has been an area of interest. You can see back here in 2018, we had the bottom just under the midline back here in December, with the close being around $3,200, but the midline around $3,400. So very consistent here. You can see actually in March of 2020 though, we did visit the lower curve, which again today that is around $16,000. So if we were to have a bottom similar to March of 2020 during that Black Swan event, then that would mean another move down, a lower leg to that $16,000 area. But also consider the fact that these are monotonically increasing. They will continuously move up just because that is how the equation is modeled. Obviously, that's not realistic for Bitcoin to move up forever, but given its longer term bullish trend, we can assume that to be the case for maybe the next few years, and then potentially we could look to some other indicators besides that. But again, I do consider this to be a great opportunity to accumulate for the long term, right around the middle of the curve where historically we've seen the bear market bottoms. And once again, this is a great opportunity to accumulate Bitcoin in my opinion. So I want to switch over to some different logarithmic curves, which I think are still important to look at, but they might have a little bit more detail, a little bit different of a story to tell. So these bands are pretty similar in nature in that they're the same parent function equation. What we're doing instead though is we're taking all of the data, every single closing price on each specific date, and we're fitting it to this green curve, this middle line, and then each subsequent regression curve above or below is just going to be multiplied by a number so that we can get more of a range and show us, the diversity within the colors and where we are within a specific color range. So you can see when we're in those darker red colors, that was the top back here in December 2017. We were in the darker oranges this time around, but the bear markets do have a pretty interesting trend behind them. You can see that we've actually had the bottom in the 2015 cycle in these darker blue ones down at the bottom. This next cycle, 2018, the bear market was basically all within this one regression band that currently today ranges from 16,000 all the way up to around 21,000. So you can see this is the same curve right here. If I were to just extend this out, again, it's the same regression curve that we had the bottom back here in December of 2018. And the point, again, isn't to say this has to be the bottom, because we could always move down to lower regression curves. We saw Bitcoin back here in 2015, again, reaching that bottom one in the dark blue, which today is all the way around $10,000. So it's not trying to tell us a bottom. It's just trying to give it a little bit more comparison, give us some relativity of the price to previous cycles. And again, we are within that band that we saw the last bear market bottom ending up being. So consider this to be potentially an area of accumulation for Bitcoin on the longer term. Yes, we could go lower. Yes, we could obviously form lower lows and even reach some of those other bands. But the point here is that this has historically been a great opportunity to accumulate. We saw this being a great opportunity again back here in March of 2020. And this is a similar level of extension to the downside in terms of the regression bands. You might say it's different from a price drawdown perspective, but consider that a natural result of not having as much of an extension to the upside. So now I want to switch over to this chart at the bottom. And basically what this is doing is it's dividing the closing price by that middle curve, that green line in the middle. All of the other regression curves are based around by, multiplying them by a constant. So I really do like this graph because it does a great job at showing you that longer term volatility has been decreasing like I was talking about earlier. And if I just zoom out here, I really just want to show you that longer term trend where we have basically an upper level and a lower level that do seem to be converging. So if I just get over here, the rotated rectangle tool, I just want to show you how, again, we do have the bottom sort of uptrending, the convergence of the bottom and the convergence of the peaks, where we do have that longer term volatility that is decreasing. So you can see that trend quite clearly where the extension both to the downside and to the upside of that middle curve has been decreasing. We have seen historically the bottoms have occurred at higher valuations and then the tops have occurred at lower valuations. And this convergence is showing us that longer term Bitcoin's volatility is once again, it's decreasing. And if we were to say take that and sort of form a conclusion, a takeaway, we could expect that maybe this bear market won't provide as significant of a drawdown as the previous ones. Again, because volatility goes both ways to the upside and to the downside, and given Bitcoin's maturity as an asset class, reaching higher market caps, I do not expect it to repeat the same bear market processes where you see those typical 85% corrections. So I hope you guys do enjoy the content and the analysis. Once again, check out our sponsors in the link in the description below. Also, by the way, I do want to give some credit to Benjamin Cowan for inspiring this type of analysis using the mathematical logarithmic regression curves. So I hope you guys did enjoy the content, and once again, I will see you in the next